I am the student loan expert here at Abundo, so I'm going to try not to spend too much time boring you with the details of student loans, but um, not all student loans are created equal. So the best type of student loan is top left, the federal subsidized loans here. So these two loans are similar in a couple ways. One, they qualify for federal repayment programs. So if you've heard of Save or Repay or all the income-based repayment options, these loans qualify for. So does the Parent Plus loan. And they also have relatively low interest. Right now, it's 6.53% for the current school year. We're hopeful that's going to go down. Who knows? The main difference here is subsidized versus unsubsidized. So the subsidized loan means that the government is paying the interest on that loan from the time the disbursement happens till they graduate, and then 6 months after that, there's a deferment period, and then they start paying. That's when the interest starts accruing. So the interest that accrues during that time, the government pays for you. And then the unsubsidized, the interest starts accruing immediately. So as soon as the disbursement happens, probably freshman year potentially, that interest is going to start accruing immediately. You don't have to start making payments until 6 months post-graduation, but you are going to have to pay the interest that is accrued during that time, and obviously can add up. So those are the main difference between those two. And then private loans, I want to talk about before we get into Parent Plus loans. If you're going to get private loans, shop around. Interest rates vary widely. When I looked earlier in the week, it was in the 4.5% to 11%, depending on lots of different factors. Same thing as the unsubsidized, interest starts accruing immediately. You're responsible for, or the student is responsible for paying that. And then payment starts again after graduation. And then I'd like to talk about Parent Plus loans because this is an area where it's got parent in the name. It seems like a good fit, right? So there's certainly things that we want to be cautious of with Parent Plus loans. So the first thing to think about with a Parent Plus loan is it's expensive. Interest rate right now is a little over 9%, 9.08%. And on top of that, there's a 4.228% origination fee, which means you're paying a fee of $422 for every $10,000 that you borrow. Obviously, that adds up. And then to make matters worse, you have to pay interest on that origination fee that goes into the loan. So it gets pretty substantial. It's also worth noting this should not be confused with co-signing a loan with your student. This is your loan. You are responsible for it. It is a federal loan, which does mean it opens up some income-based repayment options for you. Not many, but some. And it also, the long arm of Uncle Sam makes sure he gets paid on these. So there's lots of harsh consequences if you don't pay. So the government can garnish your wages, garnish Social Security to make sure that they get paid on these. So if you're going to take this loan, one, be aware that it's expensive, and two, that the consequences are very high if you do not follow through with your payments.